Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Now, cheers to a new trading day and trading week. Retail trading team. I seem to have the Monday scaries forgetting to put my microphone on, but we're good to go. Happy to be here, and I'm here with your routine briefing. My name is Mastro, and we're going to jump right into the chart, see what we got going on. So far, choppy open to begin today's session. No surprise, we got some nice key levels to look at today, and really as the week progresses here, we got a lot going on and a lot to watch for. So let's jump right in, starting with the warm-up and see what we got cooking. Okay, so cheers, Mr. Ernie. Good morning to you. So let's start with the warm-up document here, see what we got going on. I don't know how many times I'm going to say see what we got going on. I've already said it like 14 times in the 14 seconds that we've been going on here, so there it is again. So starting with today's warm-up, we'll go ahead and maximize this real quick. You did have that up and balanced auction overnight, really just more of that balancing action. Nothing too important to speak of. This is the 1 minute chart, so let's look really at the 4 hour. This is kind of our major player for today. Just kind of hanging out in that supply zone so far. Nothing too important. Just kind of watching what happens as we near that 46.25 level. That 46.25 level for me is really going to be the most important level to unlock more upside. And then similar on the downside there, that 45.95-ish level there, blue cyan line, is to unlock the downside. So really between 46.25 and 45.95, I have no interest in getting involved here. We are in a choppy environment to begin with, and especially between those levels, it's like a 20-point zone, so pretty decent amount of chop. Especially between those, actually it's 30 points, so it'd be nice if I could do a basic addition. It's that 30 point zone, lots of chop. I would rather not be involved than get chopped around in there. So we'll see what happens here. You can see that our open so far, just to go back to that warm-up document if I can find it here. So first we'll look at that execution chart. You can see that open so far. We do have that open auction look today, so we can go ahead and fill that in. Again, no surprise, same thing as Friday. We are really just trying to figure out what to do next year in this lovely and dynamic stock market of ours. So you can find this document, by the way, in the description of this video, along with any other resources that I reference, and as well as a link to that newsletter, retailtrading.com, where you get everything packaged up real nicely for you. So this document will be updated throughout the day when it becomes relevant. Right now, I do not see that happening unless we start to make higher highs here. So I'm watching those SPY levels, especially the ones you can see in bold. Those are kind of our major swing pivots, if you will. And really what I'm looking at today as well, it's my major point at the very top of the newsletter plan is I'm watching those expected move zones, watching to fade those zones first and foremost today. So right now, kind of hoping for a bit of a push here to go test that 25 area, and that will give us a nice potential short opportunity if we do get a rejection there. So that's what I'm talking about. So I'm looking at there. Let's look at the broader price action and kind of ground ourselves in what to watch for today, obviously, but also as the week progresses here. So starting off in the weekly chart, you can see last week we did put in that nice swing high, which you can see is denoted by a pretty red candle there. And again, so now we're just kind of trying to figure out which way we want to go relative to that candle. That is a potential reversal candle. That is, if you go to the links I was just referring to in the description of this video, you can see all the candles I look at, which is really only, how many of them are there? 8? Yeah, there's 8 candles. This is looking to me a little bit like a potential, big emphasis on potential, given the strength of the bulls, reversal 2 candle, which we'll be looking for a breach of that higher low to either breach the high for that first potential fade, or obviously a breakout higher, but really a break of that low is when we might start to see that move to the downside. And where am I looking at in the downside? First and foremost, 443. You can see that white dotted line on this chart here. I think my head might be in the way, so let me do this a little bit. There we go. That white dotted line in the chart there, 443, that is the unfilled gap to the downside that we got going on. So any move below, first we got to get through that October 13th trend line, which you can see in white. We did have a reclaim of that last week. So I'm going to zoom in here just a little bit, make sure my head's not blocking it. Okay, they're good to go. So pretty important. We had that engulfing candle the Thursday, I believe. Yep, it was Thursday. But that did also incorporate a reclaim the next day. We did reclaim the October 13th trend line, so be watching that real closely. And yeah, definitely we break below that 45.60 area. So 45.95, like I said, potentially unlocks that downside. That's where I think there's some good opportunity to retest that 45.60 area. That 45.60 area fails, that's when we start to make new lows. I think targeting that 443 gap. We don't necessarily do that intraday, yet that does become the downside magnet in my opinion. So real important to watch that October 13th trend line, and important to watch that 45.95 level as we navigate today and definitely the rest of the week as well. So just go back to that weekly chart. One thing I want to touch on as well is you can see that we are we are building value higher. So if you look at that volume profile on the right hand side of your screen, you can see that we've been moving that up slowly. Well, you wouldn't see that unless you've been watching these briefings, but we've moved now from last week, moved about a full dollar from 434 to 435. So we are starting to accept a little higher as we spend more time in this state of imbalance. Value is going to continue moving up. Yet I do have to emphasize we are definitely in a state of overextension. Let me check my chart here. Actually, I'm not even paying attention to what's going on. Okay, we're at 46.18. Okay, very good. So I do want to emphasize we are definitely in a state of overextension. I don't really understand all the people on the Twitter who are trying to justify and say that we are not overbought at all. I would recommend that they explore the VWAP. It's a really nice indicator. It's pretty popular. I didn't come up with it myself, but a lot of people say great things about it. And anyways, sarcasm and facetiousness aside, we are overextended. So this line right here at about that 50 SMA, ironically, so about 437-ish area, is the 4 standard deviation VWAP for the year on the daily chart. And I've said this a couple times. I went back all the way, and I'll just show you just how far back I went to make sure I got my year right. So 1996. Going back all the way to 1996, in terms of dollar amount, we are more overextended relative to that VWAP than we ever have been. So something to watch there. On a percentage basis, there are a couple times, notably that we were slightly more extended. Yet every single time we do eventually have a correction, and the longer that we spend beyond it, usually the steeper the correction. So again, this is not saying that we're going to crash by any means, yet it is a reminder that we do remain overextended relative to that VWAP. We are definitely in that state of imbalance. So it's only a matter of time, I think, before you do start to get that downside correction. And again, to me, I'm looking at that 443 gap at the very least for the magnet for that downside correction. So let's look at a couple more things, and I'll let you go as we rally on here. So this is the TPO chart for today. I'm just kind of leaving it a little messy. I want everything to clean up before I start to clean this up. We can merge a couple of these overnight profiles here. So you can see again, just kind of bouncing around right in that supply zone from yesterday. You do have that nice D-shaped profile from the overnight. Showing balance, again, you have that up and balance auction in the overnight, and we're just kind of seeing that extension there. So what's really nice about that single, you can see that yellow horizontal that's pretty nearby here, that does correspond right to that key 46.25 level. Those singles usually become support and or resistance, and so again, that's the perfect trade for me today, watching for a potential fade of that area. Obviously we can break out through it, yet I do like that potential fade. Again, acceptance. What is acceptance? It is a retreat of about 5 points, so I want to say it's tag that level and then kind of pop back down to the 4620 area. Obviously, with some candlestick confirmation. Again, you can see that in that routine day trading document, and then we'll get going on that potential short there. So we start to break out. Obviously, you have to take the other side. It's a lower probability trade today for sure, yet how low can the probabilities be on a bull move when all the market does is continue to go up? So watching that, again, just a little bit of confluence around that level you can see on the TPO chart here. Final chart for the day is going to be our lovely VIX /VX volatility chart. Pretty interesting. I'm actually liking the action I'm seeing here for the bear case. Again, maybe not today, and heck, maybe not this year, but as long as we kind of are consolidating outside this triangle, you can see this triangle. We did potentially break out of that triangle. It goes all the way back to the end of June, beginning of July, when we did have that bit of a spike in volatility. We're still hanging out outside it. So we have some I'd say 3 key levels to watch in this. Obviously, that 1440 to 1460-ish area denoted by that green horizontal below. Start to break that. Probably party time again for the bulls, and the bears are going to have a lot more work to do. On the upside for the bears and for anybody looking for some more volatility in the market, watching that 1560 area, you can see it's a yellow dotted horizontal line. First, we need to get above that. So when we get above that, we're not crashing in the market and we're not crashing to the upside in volatility. Yet if we can get a push above that 1540 to 1560 area and then follow through, making a higher high at 1620, I think that's a confirmation I'm looking for. And I think you may really see that extended pullback to that 443 gap on the SPY when that happens. Conversely, bull case, I don't see anything really happening until we get back above that 1620. So really got to watch those 3 levels closely. And it's just a nice partner to have is this volatility chart. Not really trading around it, just kind of for our own market sentiment relative to everything that's going on. I think this is doing a pretty good job now. It has finally become relevant again after almost a full month of irrelevance. So we will see what happens there. So just let's check in on Mr. Market, go to our structure chart, see what we got going on. That first 15-minute candle just printed a few minutes ago. That is a potential bullish continuation candle. So nothing to do here for me. Like I said, looking for that pop above that into that single on the TPO, at least to that 4625 area, or that pop below to at least, or excuse me, at the first level to look for is at 4595. So levels are pretty clear. Not really much to do, I don't think, until we play around with those levels. So that's really what I got going on the charts here. So just one more thing. It is the end of the month. Month ends often do have a trend move at some point in the day, so be watching for that. It doesn't always have to happen yet. Definitely on the lookout for those as the day progresses and as we prepare to end the month. So that is all I have for you to begin this lovely Monday. I'm going to go hop on Twitch after this, play some music as we watch paint dry here. Hopefully the paint gets a little more moist, as they say. I'm not sure that's part of the idiom. I know some of you probably love that M word there. But yeah, that's all I got for you. I will follow up with the newsletter immediately. And until then, all the resources are in the description of this video. I'd love to see some engagement in the comment section on this video or on Twitter at Routine Trader. And I'd really appreciate you give this thing a thumbs up to help that YouTube algorithm. It's always appreciated. So that's all I got. Thank you for your attention. Stay classy until tomorrow.